If you wanna be crypto savvy, we can help you skip those valleys. Let's rally, yeah. If you wanna be crypto savvy, we can let it.
Welcome back to Be Crypto Savvy. I hope everybody's enjoying your weekend so far. We typically don't do, the normal full-length weekend videos, but you know what? I said it's Easter weekend. The crypto savants out there, they deserve more. So here we are, and we owe it to the people. So let's do this. We are checking out Bitcoin on the daily time frame, as we typically start out at, and we are currently woof. We are currently sitting at just above $28,000. If you look back at yesterday's candle, that remained red. If you watched yesterday's video, I thought that would flip to green and get into that 28,000 and slightly above territory, which it sadly did not. But today is the day. Nothing big happening, but we did get to that $28,000 level, and I anticipate it's going to be a relatively quiet weekend. We'll probably just kind of see a little bit of sideways action, more or less, between that, upper 27,000 area and lower 28,000 area. However, if you throw on the Bollinger Bands, you can see that we are getting close to a pinch, which by the end of the weekend, that might pinch close enough to see a big move. If you aren't familiar with the Bollinger Bands, if you look back like in this area here, you can see once you start getting closer together with the blue bands here, and you start getting those pinches, typically that's when you'll see a move relatively soon after. You can see when we got close to the pinch here, we saw the quick drop down, and then it did bounce off the bottom and quickly rose up to the top. And I mean, if you go back through time, you can see other examples as well. You see a pinch here, and it wasn't a huge move, but we did jump from the bottom of the Bollinger Band up through the top. You see another pinch back here, and that's actually when we saw the extreme jump. This is post FTX collapse in this area here. When you see the pinch here is when we actually jumped and made that latest huge jump. Now we are getting close to a pinch again, so it's something to keep an eye on, which also does correlate well with our RSI down here, our stochastic RSI, which we were talking about yesterday as well. I do see this coming just slightly lower, possibly looking similar to where we were back here. And that would be a great time to see a reversal, because when we are beneath this 20 line, I have mine set up as 20. I like mine set up as the 20 instead of the 30. When I'm looking at Bitcoin, I just found that seemed like a better indicator. So mine is set up as a 20 line down here and 80 above. A lot of people have theirs set up as 70-30. Anyways, so as we move throughout the weekend, and this does drop a little bit, that's a great time to also see the Bollinger Bands constrict a little tighter and see a move. Now, the Bollinger Bands don't indicate if you're going to see a up or down move. However, adding that in with our stochastic RSI, we can see that we have been in the oversold territory for quite some time. So it is likely to see a move towards the upside, possibly testing that $30,000 resistance later this week. We shall see. Now, one quick thing to note before moving on about the Bollinger Bands. If you see where the constrictions happen, there typically is a little bit of volatility within the band afterwards. You can see right in the top of the band, fall into the bottom, right into the top, fall into the bottom. There was another pinch in here. However, what I'm saying is when this pinches and our stochastic RSI completely bottoms out for the time frame that we're looking at, if we do head up to the top and test that resistance, do remember how heavy of a resistance this is. That isn't just 30,000. That structure support dating all the way back to 2021. So with that being said, if we do get that move to the upside, I do believe we have some strength, seeing as how we've been sitting at this level for a couple weeks now. So it's not out of the question to not only test 30,000, but possibly perhaps even push up to our next resistance zone. But do keep in mind, we are due for a pullback here at some point. Not just a correction where you see the sideways trading, but we are leaving behind a lot of fair value gaps. We've talked about fair value gaps in previous videos, so just to talk about those quickly, and then we're going to jump into the Genie.io range report. So do make sure you stick around. So these fair value gaps are these huge areas in the price where, as the price moved up so quickly, there wasn't enough sell pressure to fill all the orders, and that's why you see such quick jumps, is because the buying pressure supersedes the selling pressure by such volume that there's just not enough Bitcoin or whatever the commodity is that you're looking at. There's not enough being sold, so the price moves dramatically to the upside. And it would be the same thing if it was reversed. Now, when that happens, you have all these empty buy orders that were never filled because there just wasn't enough available. And when that happens, those pockets of liquidity are called fair value gaps. And you can see, if we look back, like this is a fair value gap right here, and you can see that the price typically will tend to come back and fill those fair value gaps. Most of the time, that is actually what happens. There are times where something will rise and it just never returns to that price, and those obviously would never be filled. However, in the majority of fair value gaps do tend to get filled. Now, so you can see how, this fair value gap ended up retracing, ended up getting filled. Same thing here. You have a fair value gap. The price superseded the buying pressure, superseded the sell pressure, floated around a little bit, but ultimately came back down and filled those orders. Now, we do have a large section down here. This is all the way down to like the 20,000 area, all the way down to 17,000. So we do have quite a few fair value gaps, which is one of many reasons why I do believe that in time we will see Bitcoin come back down to the bottom side of this expanding symmetrical triangle that we've been talking about going back to the beginning of this year. So I just wanted to get that stuff out there, just to throw it in and keep it in the back of your minds. Let's jump over to the Genie.io range report and stop wasting time. First things first, if you are not familiar with what the range report is, I'm going to throw up a video in the top corner right here. Feel free to watch that. That just explains in detail what the range report encompasses, how to read it, also how to not only get your 10% off, but also how to start using it absolutely free with a 2-week free trial. And I do see how many of you are taking advantage of this offer, so congratulations. You will not be disappointed. I'm pretty sure of that. I have been really enjoying using this over the past month or so. So let's jump into this, news and events. I won't get too much into today. We're already at about 8 minutes or so in the video. Just the top one is Bitcoin traders expect big move. Next is Bitcoin price flatlines at 28,000. Basically what we've been talking about. We've been, over the last couple weeks, just sitting around that $28,000 level, just kind of re-establishing that RSI to make a move. So I think a lot of folks are ready to see that happen, as we've been sitting up there for a little bit. $28,000 at the time of recording. Checking out the volatility forecast and opportunity zone and relative value. This little part here is just your typical weekend dip, as retail is the only market participants. And I'm guessing what we're seeing here as a possible spike, dip, and gradual recovery. I'm guessing this has something to do with the inflation numbers that are expected to come out, as well as the FOMC report that we were talking about in yesterday's video. If you haven't caught that, I can throw that up in the corner here for you as well. And basically, the FOMC report is just the report covering the last meeting. And basically, people involved in the market will comb through that. Excuse me, I'm sorry. Will comb through that report looking for any possible indications that they can find, subtle hints that may have been overlooked leading up to the next FOMC meeting. So I'm guessing the action that we're seeing this coming week is anticipation of what is expected to be seen within those reports. Moving on, as always, skip past the candles as we typically are doing that over on TradingView. As the same thing with the relative strength index. You can see with the daily over the last 30 days, we've just been slowly putting in lower highs and lower lows. On the hourly, over the past 7 days, you can see we have been ticking up slightly, slowly put in higher highs and higher lows. So we do have a couple contradicting movements, which has given us a little confusion as far as not exactly knowing which way this thing wants to go. Like we said over in the other part of the video, more than likely we're going to test that $30,000 limit before seeing that pullback, but we shall see. MACD and stochastic, not going to spend too much time. We're still just kind of waiting to see if the bearish cross that we saw on both of these, which we're seeing another one on our stochastic today, will end up playing out. Bitcoin average price, not spending much time on. Same thing with on balance volume. Still just been riding steady after seeing an uptick. So that has not been dumped yet. Average directional movement index is showing that some sort of trend is establishing itself. Anything above the 25 line is an indication of a trend establishing itself and growing stronger and stronger the higher the number you go. This indicator doesn't tell you which direction that trend's moving, just the fact that there is trend strength. Ultimate oscillator, over the past week or so, we've been talking, has just been really steady at the 50 line, just remaining pretty neutral. Parabolic SAR is 3 printed green dots in a row, I'm sorry, 3 printed buy dots in a row, or green, whatevs. So that is, on the parabolic SAR, we do look for 3 straight dots for more of a solid confirmation. So this would maybe support that possible first push up to 30,000 perhaps to begin the week. We'll see how everything plays out. Let's move on past the Fibonacci for today. Nothing new with Hikaki and Kopot curve. Just still seeing the Kopot curve messing around that 0 line, but not crossing it yet. And moving on down to the historical, went from 90% to just under 89%, looking solid there. So more or less, I'd say that we are getting some pretty good confirmation of an expected beginning of the week push, followed by a mild pullback and recovery, and possibly some decent dollar cost averaging days down the stretch here. So definitely some good stuff in the report, and I think we're just going to leave the video there for today. I hope everybody is going to have a amazing, beautiful, family and friends filled Easter weekend. I'm going to get the boys out, taking my 2 boys out golfing tomorrow, and hope everybody is able to do something that you enjoy as well. And as always, if you got anything of value from this video, don't forget to like and leave a comment. And we will catch you folks on the next video. Deuces.